From a global perspective, the United States has been the place to be for stocks over the last several years, but our guest today thinks that may be about to change. International may be cranking up. Bill Kennedy is from Fidelity Investments, portfolio manager of Fidelity International Discovery Fund and Worldwide Fund. Bill, you say that after many years of sort of slogging, international may be the place to be now. Yeah, well, we've seen international underperform the U.S. now for many years. Some of that has been, the fact that the U.S., we've seen earnings, growth faster in the U.S. And international, we've had problems in Europe, we've had problems in emerging markets, and that clearly now we're starting to see that clarify a little bit. And you're moving into an environment where now, given the political changes in Europe, some of the political changes we've seen like in India and emerging markets and Indonesia, you're starting to see more earnings clarity, more clarity on policy, and that clearly makes, as a stock picker, for a better environment. On top of that, you've seen the S&P 500 has been, hitting all-time highs. The PE of the international stocks versus the S&P 500 is at a very low level relative to history. And we tend to find, usually when these PEs, this discrepancy gets as wide as it is today, international stocks start to outperform the S&P 500. And how long do these cycles generally last? 5 to 7 years, and we're kind of in the 7th year of underperformance. And if you invest internationally, do you have to worry about the dollar and figure that out into the calculation? Yeah, but the reality of it is that there's a lot of good companies internationally that do very well regardless of the direction of the currency. So if the euro or the yen is weak, exporters benefit a lot. And if the euro or the yen is very strong, domestic plays benefit very, very much from that. So I'm a stock picker, so I'm going to go where I find the best opportunities, and if I feel as though the currency is going to strengthen, I will buy a lot of domestic plays, and I'm doing that in Europe today, because cyclically Europe is getting a little bit better. And some people say, look, you are globally diversified when you buy an S&P 500 fund. All the companies are doing business internationally, they hit the earnings. Yeah. You think that people should, in fact, have international stocks as well? Yeah, of course. I mean, if you look at the opportunities that I'm looking at, I can go in and I can pick those stocks and play a big theme and bet pretty large. One of my top holdings is an Indian mortgage company, and a couple of banks in the US may have tiny exposure to Indian mortgages. Mortgage penetration in India is 9% of GDP. It's very, very north of that in the developed world. But I can go in and I can find a company that's doing very, very well in a lowly penetrated market and bet really, really big.